When I talk about the next question coming from the table of July 24 mock test paper, C.A. Sumit has been appointed as a statutory auditor of Core Limited. List out the some matters that he may consider in determining whether a deficiency or a combination of deficiency in the internal control constitutes a significant deficiency. So, what are the list of items which constitute as a significant deficiency? See, first of all, please understand that significant deficiency in internal control is one where auditor think that the deficiency in internal control which is unable to prevent, detect and correct the misstatement. So it has to be brought to the attention of the shareholders. So you have to look into the likelihood of deficiency leading to material misstatements in the financial statements in the future. You have to see the susceptibility to loss or fraud of the related assets or liability. You have to see the subjectivity and complexity in determining the estimated amount, such as the fair value accounting estimates. The financial statement amounts exposed to the deficiency. So you have to look into what you can say the deficiency. For example, say there may be a deficiency which may lead to any material misstatement in the financial statement. Susceptibility of loss or fraud may be related to an asset or a liability. There may be some complexity involved in case of an estimated amount, like say provisions, contingent liabilities, that's the thing here. Our financial statement may be exposed to the deficiency. Deficiency means when the control which is intended to function is not functioning in the manner. Ultimately, internal control is a policy procedure of the organization. So take example, I have to sell the goods only to an authorized customer. When I don't sell the goods to authorized customer, it becomes a deficiency. Okay. Similarly, when I don't purchase goods from authorized supplier, it becomes a deficiency. Okay. And what are the other examples? Like say volume of what you can say volume of activity that has occurred, and what has happened is that in account balance a class of transaction it is exposed to certain deficiency. Example, you kept on purchasing the goods from unauthorized supplier, that is not acceptable. So controls, you have to look into the controls for financial reporting, like say general monitoring controls, control for prevention or detection of fraud, controls for selection and application of significant accounting policy, controls for significant transaction outside the entity's normal course of business. Then controls for any period end financial reporting. Say for example, you're passing a non-recurring journal entries, so that is not acceptable. That's mainly why these journal entries are passed to adjust the profit. So, what is the cost and frequency of exception? What is the result of deficiency that you have to see? That's the thing here. So, the interaction of there is a deficiency in internal control, and there are other deficiencies in internal control. All these factors you should consider to arrive at what you can say the complete deficiency in the internal control. Okay, so this is what you have to understand about significant deficiency. Significant deficiency is something which you need to understand one thing, my dear soldiers, that deficiency in internal control always comes into picture actually where control is not functioning as intended, and you bring it to the attention of the stakeholders, those charged with governance, to the stakeholders that this is very critical in nature. Okay, so this is how you have to understand about the significant deficiency in the control.